Morning, everybody. So
Good
good
morning.
to see everyone.
Good morning.
Hey,
Good morning.
morning.
Good morning.
Hi.
Morning,
Good
everybody.
morning.
Good morning.
Where is the fucking decimal?
We're expecting a good crowd.
How many are we expecting now, Lyle? Or do you know? Just
We
a
had
big,
over 250 registered today. So,
nice.
yeah. Just going to give it another minute or so to make sure that everybody has a minute to get in.
Yeah.
And Lyle will get us started.
Can't believe we have that many people that want the update on COVID again. So,
I've got the wrong meeting, I'm sorry.
as soon as I said that, we lost 50 people.
Oops, I'm on the wrong call.
Nobody wants to hear about that anymore.
All right, Lyle, you want to get us started?
Yeah, ready to go?
Hmm.
Still not we're not halfway to that number. Should we wait just another minute or
Jim's got at least an hour of material, and we want to give him
yeah,
some time for
we got a
questions.
lot to cover. All right. Hey, we want to welcome everybody. Thank you so much for joining us. It's been a while since we've done one of these, but we're thinking about you all the time. And you know what? This is funny. One big, beautiful bill explained. Uh, Jim's been working on this for several days. It's a big bill. It's a lot to cover. There are a lot of other names that bill's going by right now, but we decided we're keeping out of the politics of it and just going to share with you the very best we can on what it's going to do to impact us in human resources and in our businesses. So Jim's open for questions. He's got about an hour's worth of material to cover. If you feel urgent, Jim said he'd take questions anytime. You can load them into the system for us. But definitely, we're going to stay on for about a half an hour afterwards to take questions. So don't hesitate to think about it. Post them in there. We'll get to them as fast as we can. Jim, always a pleasure to see you. Hope
It's a
you're doing
pleasure to
really
be here.
well. Looks like you're
Uh,
staying busy.
Staying really
Take
busy.
Take it
First
away,
thing,
Kendra and Chase. Thanks for setting this up. All the HRG team that put it together, we appreciate it. Let's go see what we can learn.
absolutely. So, first thing is, I will be the first to admit, no, I did not spend the last week reading 1,300 or 1,750 or whatever it is, number of pages. I had to digest it in different ways and ask questions of people up on the Hill and get explanations, research like crazy. So if you start quoting a page number and ask me about that, I'm not going to be able to answer by the page number, and I'm also not going to be able to tell you what all I memorized. It is a massive amount of information. Along with that, and part of the reason for that, I wanted to give a little bit of a primer on what this all is. It happens every year, but nobody really understands what this huge bill is about. It's called One Big Beautiful Bill this year. It's the same thing every year. So let me give you a little bit of background on how we got here. This won't take a really long time, but it's critical to understand why it was all dumped into one. And it's happening over and over again. And it's important to understand for next year when this happens. So there's something called a filibuster. And what that filibuster is in the Senate only, not in the House, there's a filibuster, which is a use of irregular obstructive tactics or a very long speech or some combination of that. What it really has now amounted to is nothing can get through the Senate without 60 votes. because 60 votes is required to shut down what has been called a filibuster. Basically, what happens in the Senate is the majority leader asks for something to be brought to the floor. In that ask, there's some consent. They ask for unanimous consent, and they have to have 100 senators agree that something can be voted on. If you've watched our Senate or the House any time in the last 50 years, nothing gets through the Senate without or with unanimous consent, unless it's something like recognizing that today is National Something Day. Yes, those can get through because everybody wants their constituents to be happy with them. Everything else is log jammed in the Senate. That's why you see things pass the House and they never get through the Senate and they never become law because you have to have 2/3 or 60%, I'm sorry, 3/5 or 60%, 60 votes to get through the Senate. So in this situation, if no senator objects, it goes to legislation to be voted on. If any of them object, it's called Rule 22. Then you have to have the 60 senators vote to shut down the ongoing discussion. So that's where this kind of is. Because the equally divided Senate, 53-47, you almost never get anything through. So how do we get here with 60 votes or without 60 votes? It's called the Budget Reconciliation Act. I'm going to click these so you can read on it while I'm talking. I think that's the end of this page. It's a process that allows tax, spend, and debt ceiling to be done with a 51 vote or 50 tie plus the vice president on either side. So this is limited and it started way back in 1974, but it wasn't actively used. It's a tax and spend legislation is allowed to have 51 votes because the government has to keep working. We've heard multiple times over the last several years about a temporary extension that they're doing temporary spending. Now this with this vote that just went through, that's not temporary. It is an actual budget. So budget reconciliation or a reconciliation bill is a 50-50 tie with the president's vice president breaking it if it's in favor of the president or rejecting it if it's against the president. It limits, though, the types of things that can be in that bill. It must be spending, debt limit, revenue, tax, period. So that's where the rub comes on. Everything has to be in this one bill, one big, beautiful bill, as it is actually was called, but then there was an objection to that. But it's the reconciliation bill of 2025. This bill must have every aspect related to either taxation or spending or the debt ceiling. So it avoids this because everything must be done in 20 hours once they get it back. If it has any changes from the House, then they have only 10 hours to debate that and it's up or down, period. So I thought I clicked all of them, sorry. Then it can be signed by the president if it's been approved. So the limitations on this, it's called the Byrd Bath, and it's for Senator Byrd. And Senator Byrd passed or wanted to have restrictions on what could be done. So then they decided to call it the Byrd Bath. It dictates what can be done in a budget reconciliation bill. And in that bill, you have to prove to the House parliamentarian that the what you want in that bill or the bill as it originally comes from the House is actually tax, spend, debt ceiling. If it doesn't get through, then you have no ability to have that in the budget reconciliation. You have to go back to having 60 votes. So in this bill, it was critical to one side, not to the other, to have every single thing put in here that they could possibly tie to taxing, to spending, or to debt ceiling. And one person got to decide, is this actually a tax, a spend, or a debt ceiling? If that one person says no, then that part of the bill did not get through. So that's why some of the things in the House came over and the Senate did not approve it, and it ended up having to go back to the House and be approved, either because of the bird rule, bird bath, or it ended up being some of they couldn't get enough people on the one side to vote in favor of it, so they had to make certain changes to it. The parliamentarian, believe it or not, is not a elected position. It is a full-time person. And so there, I won't get into it, but it is an amazing debate back and forth with full hearings behind closed doors, almost like a judicial setting where everybody's arguing in front of this person, trying to convince them that this is a spending or this is not a spending. So there's a tremendous amount of back and forth. So that's how we got here. 51 votes is all that was necessary. As soon as you have 51 votes, then it becomes law if the House approves whatever the changes are. So, how do we address now the one big beautiful bill and the impact on businesses? So, the things I'm going to talk about today are the no federal tax on overtime and tips, the minimum work eligibility for Medicaid, the health savings account expansion, the dependent care flexible spending account increase, the increased immigration enforcement, and the tax changes. Tax changes I'm going to talk about, but I can't give you any information on actual tax because I'm not a CPA and I don't want to mislead you on things. So you're going to need to get with an accountant on those details. And then also the other caveat to this whole thing is if you ask a question in the chat, I will attempt to answer these as much as I possibly can. If you put in the chat things that are individual to your own company, I cannot answer those because we're on a webinar for CECs and I can't give legal guidance to an individual entity without a retainer because I would be doing an unethical practice without having a client. So you could sue me for giving improper information, and I could be disbarred for giving legal advice without a relationship with my client. Just got a question: will the slides will they be available? Absolutely, they are available after, so we'll get that to you. No tax on overtime. So here we go. It's not quite as awesome as it sounded right up front. This is nobody's fault except for if you thought you were going to get a free ride, you're not. I talked to Kendra about, I'm wondering how I can just start getting overtime and not being managerial. They kind of shut that down too. Not completely, but for mid-level, high level, there's some restrictions that make it difficult. So what are those? First, you have to only be making 150,000 or less to be eligible. Couples have to be less than 300,000. Secondly, let's talk about the tip deductions. Tip deductions, they have to be in a customary tip job. They list them, but it's not exhaustive. Those are servers, hotel staff, bartenders, hairstylists, cab drivers. You think of doorman, you think of where you might tip somebody. Those are the only types of jobs that can claim tip wages. You cannot make this something where, oh, somebody gave me a tip as an attorney and now I don't have to pay it, or, I got a percentage of that's not going to work. They are going to be restrictive. Also, the Treasury Department will be issuing no later than October the 2nd a comprehensive list of all jobs and all types of situations where a tip can be allowed. They have until October 2nd. That will be then applied for 2025. One thing to keep in mind, you'll see on here, certain things are effective January 1st, especially with the health savings, the high deductible health plans. Those are effective January 1st, 2026. Why? Because 2025 is half over when this got passed. It still has to go through all the regulatory before it can be enforced. And people have already made their election selections, and employers have already done things for the health year. So it has to be starting 2026. Others are backdated for the entire year 2025. The tax on tips is one of them. On the tips, only cash tips, including tip sharing and tips reported to the employer. In other words, you can't come in at the end of the year and say, I made $130,000 in tips and only $20,000 in wages, so I only paid wages on 20. You have to report this to your employer. There's a lot of cash under the table in restaurants, especially. If you don't report it to the employer, you're not going to be able to have it included in the tips, the over or the tax-free tips. The maximum deductible tip is 25,000. So again, you're not going to say I only made $20,000 and there's 125,000 in tips. They cap it so that you're only getting it up to 25,000. After that, you will be taxed. Now let's talk about overtime. That's the other thing. A lot of people were thinking, "Oh wow, that's I can claim all overtime and I don't want to be a manager." Yes, up to a point. Again, keep in mind it's 150,000 for an individual, 300,000 for a couple. It's also what's defined by the FLSA. So if you're a manager and you want to go to, or you have employees that you have made manager and they want to go back to being a lead without the responsibility, you can do that, but they have to understand that you're capped at 150. You're not going to be, and when I say capped, your taxes. You can pay people over that, but they're not going to get it free and clear. They're going to be taxed on it at their rate of whatever the federal rate is. So keep that in mind. The other thing is, it is for work during a work week that's beyond the 40 hours. It only applies to the premium portion. What does that mean? It literally is only that portion that is above what your regular wages are. So if I'm paid $15 an hour, I'm still going to be taxed on the $15 an hour for overtime. I'm not taxed on the $7.50 additional that is paid in overtime. So when there's no tax on overtime, you're not getting my entire time and a half tax free. You're getting the half tax free. So that's a little difference from what some of the discussions were going on and people were understanding things. To some people, it's like, oh my gosh, once I get to 40 hours, then I'm living free and I'm just going to bank on how much that is. It's actually limited to the premium on the overtime. These exemptions only apply until 2028. This is not going to be beyond that unless it's passed through by Congress. So this is one of those that when they say some were permanent, some are temporary, this is temporary. Stepping back for a second to one other thing I wanted to explain. There was a lot of talk about the cliff. At the end of this year, there was a cliff. And I don't know how many people really knew that. All of the tax setup right now, businesses are taxed at a lower rate, and they have been since 2017. Individuals in the lower income to mid income have been taxed at a lower rate than they were previously. That's all started in 2017. It was the first uh, budget reconciliation bill that was passed during the first Trump administration. The taxes in that situation were temporary. So 2025 was the cliff. And so at the end of this year, if this hadn't gone through, there were tremendous tax implications, and it was widespread. From flow through businesses, small businesses were going to be hit with a massive tax increase. Mid-level people, white, blue collar, white collar, lower white collar workers, and low income were going to all be hit with a large tax increase. This is one of those. The tax on tips and the overtime are also going to be. It's a temporary 4 year. So in 2028, these will go off the board unless they are made permanent or re-upped with the next tax bill. Overtime becomes effective now. It is for the 2025 year. If you see, it's all starting 2025 tax year to 2028. I saw that question come in. In terms of reporting, this is what's reported on the employees' W-2s. So this would be their W-2 income. However, I want to clarify on the customary tip job taxes. This has to be reported to your employer. So weekly, the employees have to report. I have a daughter who was a waitress. When she was a waitress, some of hers got reported. All of hers got reported. Um, if it's on a credit card, most people are paying now with credit card, that's automatically reported to your employer. If somebody leaves cash on the table, you're supposed to report that or estimate that to your employer. That's done all the time. And then that gets put on your W-2 at the end of the year, and that is an annual reporting. So I want to be clear though, tips are reported to your employer at the end of shift. Tip sharing is done by the employer documenting properly what the tip sharing is, and then credit card tips are always shared at the end or on an ongoing basis. The employee gets their portion of whatever that tip is based on the direction from the customer. So this is one of those that takes effect in 2025. So the Medicaid, that is, it now requires certain things to be eligible. So how does that impact an employer? Some of these were not truly employer, but it impacts you. So I listed it. Medicaid is not an employer-based issue. It is between the lower income. It's a safety net that was established back during the Great Depression. And so it is a safety net, but how does it impact employers? I'm going to tell you here in a second. First, it has prerequisites for eligibility now. Adults between the ages of 19 and 64, if you're able to do your job, you must work 80 hours a month or you must engage in qualifying activities. Those qualifying activities are job training, job education, or education in general, approved community service. It does not apply to those with exemptions, those with disabilities, medical conditions, or dependent children. So this is not Medicare. This is not for the elderly. This is not disabled individuals who cannot take on a job, dependents. This is not for people who are incapable, but those who are capable of working and have no reason why they're not should not be, this is what the bill says, should not be receiving free medical care from the government unless they can demonstrate that they're working roughly 20 hours a week, 80 hours a month, or that they're trying to get a job, i.e., job training, or that they are donating time to their local community, they're doing community service, they're out working somewhere for free. If they can demonstrate they're working 80 hours, then they get their Medicaid as per normal. The way that this impact, sorry, I forgot this. States are required to verify. This could increase some of the red tape. So I put this in as the impact on employers and HR. States have to they have to report eligibility every 6 months at the time of application and 6 month increments. How does that impact an employer? HR may need to be putting together, and we'll see in the regulations from the federal government what this really looks like, but HR is going to have to put together the manner in which that is applied, how it looks to the states. It may be a state run where Kentucky, 95% of the people on here are from Kentucky. The state of Kentucky may come out with a form. Employer has to fill out the form, identify the number of weeks, or check a box and sign it. So that could be an increase on HR. So be prepared for that. The other thing is that there is pretty standard. You're going to get some naysayers, but it's pretty widespread that this will increase the people in the job market. You're going to see a lot of people who are wanting to get a part-time job. If you go to any fast food right now, you're seeing people posting up to $15, $20 an hour, and they still can't get people to work. There will be people now wanting to work 20 hours a week. They don't want any more than that because they don't want to lose Medicaid, but they want their 20 hours in order to get their Medicaid. So you're going to see an influx of people being willing to do jobs and willing to work in order, reportable income in order to maintain their eligibility for Medicare. So that's my understanding and the take on the Medicaid. So the health savings accounts and the expansions. Um, this is designed to possibly give employees more options, to give employees more freedom, and to give employers more permanent. A lot of these were, and I know that Hannah Resource has been dealing with this, and I'm assuming a lot of you are as well. A lot of the high deductible health plan, they were temporary. So it's literally been passed forward. Okay, yeah, we'll do this for another year. Okay, yeah, well, you have this for 6 months. Stay tuned. We're not sure whether you're going to get this or not. It'll depend on what Congress is going to do or what we want to do from a tax basis. This made a permanent change to the high deductible health plans, to the FSAs, which we're going to talk about here in a minute. So this literally made permanent changes. Now, permanent, our government, our Congress is only as permanent as until somebody else changes it. But there is no deadline this time where, okay, it was only eligible until 2024 and then it became, or 2023, and then it became an ongoing postponement month by month or 6 months or a year. So this is now eligible to the Affordable Care Act participants starting in 2026. It makes permanent the allowance of telehealth coverage before deductibles for the HSA compatible plans. The high deductible health plans may continue to cover telehealth and remote care. This was and we've dealt with this in Kentucky as well. The telehealth was temporary. For those who don't know, telehealth was frowned upon by everybody until COVID. So there's big debates about whether telehealth would be allowed. This now allows telehealth to be covered, which has been a tremendous benefit for employees because they don't have to take as much time off of work. Employers don't have to allow as much time off of work. It's cheaper a lot of times for the employee to have a telehealth versus in person. So this allows this to be a permanent thing. It's not COVID limited. It is now a permanent part of medical. Also, by the way, for those that don't know, the reason why your doctor should, if they don't, ask every time they meet with you, where are you? Is they are not allowed to give medical treatment across state lines. They can't help you if they happen to be, unless it's an emergency. If they're in Florida on vacation and you want to go see a doctor, you can't see a Kentucky doctor in Florida unless they're a Florida doctor. The reason being why they have to ask you is if you happen to be vacationing in Florida and you have a telehealth with your doctor and you start asking questions or they start answering questions, that's technically providing treatment in the state of Florida because the patient is there. So if you haven't experienced that yet, I did early on, and the doctor couldn't treat me until I came back because I happened to be in Florida at the time. So that's why you get that question. So this is in 2026. I'm going to put these all on the screen. The HSA funds can be used for the direct primary care. Why is it 2026? Again, the eligibility for health care plans, health savings accounts, and so on is an annual selection election. And so this starts January 1 of 2026. You could do 150 or 300. That's for an individual or a family. The impact on employers. This is a permanent allowance now of telehealth. That helps with stability and understanding. It allows for a broader scope of covered employees, including those on the ACA, and they can be offered with telehealth and direct primary care. And it could lead to an increase in the potential employees seeking employment in order to take advantage of your health savings accounts. So, FSAs. These are the flexible spending accounts. They're offered by an employer, allows for an employee to pay for medical expenses or dependent care. Big changes to that help with the dependent care account. The question I just saw, I'm going to go ahead and hit some of these because I know we're getting a lot of them. Does it apply on the HDHP in 2025? I do not believe so because these are triggers starting on the 2026. You'll have to look into individual. I didn't look into that specific part of telehealth in 2025. It may, and I might be able to provide that information. I did not look. so I don't want to give you wrong information. Most of the FSA, HSA, HDHP was effective January 1st, 2026, but the telehealth exception, that has been an exception throughout. I think on the ongoing, no, that is not. That's new. Some of the things were in there, so I'm not positive on that, and I apologize, Diana. I can't answer that on the fly. Um, on the FSA, this was crazy to me. I didn't realize that the FSA had not had an increase ever. 1986, I think, is when it was implemented. If not, it hasn't had an increase since 1986. So it's great it went up. It went up by 50%. It's pretty sad that it hasn't gone up in 40 years. I was shocked by that. I've had flex spend accounts for employees, but we provide a really good plan, so we didn't have it at that level. But it's shocking that they allowed 5,000 in 1986, and now for 40 years, nobody ever thought to increase that. So now it's been increased. You can offer more than that, but there are taxing implications for anything more than that. What this is it's used for eligible costs for dependents, children, child care, flex spend for you, so on. The impact on the employer is that this allows for greater flexibility for your employees. It should be something that you can offer in lieu of or in addition to the plans you have, and employees can be happy about that. It could assist with struggling employees with their needed dependent care solutions. You'll need to make sure to go through all of your pro forma plans and documents that you all have that are pre-printed that people can get or are online. You'll need to make sure that you do a global change on all of these because it does change the dollar amounts everywhere. But then you need to look, and I'm not a tax specialist, but you'll need to make darn sure that Section 129 is not an issue because Section 129 has really been difficult for a lot of people to satisfy the requirements of that. If you're not familiar with it, basically you can't discriminate against your employees. And this is not race discrimination, gender bias, whatever. This is literally financial. Most of your plans, if you really look at them and there's a dollar amount attached to it, help the higher income employees that you have, C-suite, managerial. If you can't pass the Section 129 limitations, you've got problems. So even though the government has raised what you can offer to your employees, you have to make darn sure that you're not offering a level that makes it so that your higher level employees are getting fringe benefits that nobody else can afford or nobody else can receive. So get with your CPA, get with your tax specialist, make sure you're not in violation of federal law, federal tax law with regard to how you're offering it and how you're handling things. All right, so the next one is the immigration naturalization ICE. Um, so the government has increased the budget for ICE to nearly $30 billion this year, $170 billion over 10 years. We have in our government already immigration laws that say it's illegal to come across the border. I've heard one congresswoman make the comment that crossing the border is not illegal, and she's an attorney, by the way, which blew my mind. And so there's no law against coming into the United States. Yes, there is a very, very basic and very, very strong law that says that you cannot cross the border without permission, and there's a method to receive that permission. So, ICE is doing a job to enforce a border that is supposed to be pursuant to the United States laws, just like every border in the world is pursuant to the laws and regulations of that government that runs that border. The purpose this year is to hire over 10,000 new ICE employees over the next 5 years. This will lead to an increase in scrutiny, deportations, and I-9 compliance. The I-9 compliance is where I want everybody to be focused on. The impact on employers, this could increase workplace activities, audits from the federal government, I-9 inspections, workplace raids. In 2000 and I want to say it was 2018, Tyson Foods, followed by a lot of other chicken producers, were subject to several raids and were um, they ended up being in a lot of trouble because of the number of people that were hired that were illegal. Um, I'm going to talk to you in a minute about the cost because this is no joke on how much it costs you per employee. Repeat violations are extravagant, so you need to be aware of how much it's going to cost you if you decide to do this. You need to verify your rights and responsibilities with regard to I-9, with regard to immigration. And I would just tell you this, and I don't have a slide on it because it didn't impact OSHA, so I'm not going to throw it in here. But in talking to Kendra about this and Lyle before like last week, there's a lot of OSHA going on, less now under this administration, but I dealt with a lot of OSHA under the last administration. And there are some holdovers that are going to continue to be an issue. You need to understand what your OSHA logs, what your OSHA obligations are, and make sure you're in compliance there as well. So if you're not getting guidance on that, you need to. Just a little hint. You need to establish well-defined policies and procedures related to ICE, immigration, I-9. You need to have points of contact, and those points of contact need to be aware not when ICE knocks on the door. It's a little too late to do the right thing when ICE knocks on the door. You need to have a point person who knows if this, open up a one-page bullet point with no more information on it than what's on this page as to how to handle, what to do, who to contact, what the phone numbers are, what the emails are. I have this put together for the employers that I represent as retained general. And this is where, when you are contacted, the first call is to me, not you all, but to my clients. The second call is to whoever it is that is the point person on site. The third person is the owner. You have to step through this very carefully because one wrong word to a federal authority will result in substantial differences in how this is handled and what your penalties are. You need to also verify ongoing compliance, and we're going to talk a little bit about this on the next slide. So, ICE penalties. This is per I-9 violation. 2,861. If you knowingly hire an undocumented worker, it is 5,724 per employee. If you repeat, it is 28,619 per worker. So, like on Saturday, I think it was Saturday, there was a marijuana farm raided out in California, and they literally had over 300 employees. It appeared to me, behind the scenes, reviewing some of the details of the charges and so on, it appeared to me that these were knowing violations. It appeared to me that there were repeat violations, and the amount of penalties for that work, let's just take the minimum, 2,861 for over 300 employees working on that farm. Um, it's going to be extensive for that employer. Those are civil fines. Then the criminal is up to 10 years in prison for the principals involved, the owners, the managers, the high level managers, and the directors and the officers, the board members, up to 10 years in prison and $250,000 in fines. These are the laws that have been on the books. So this is not new. I'm not telling you ICE penalties that just got adopted. The only thing that's new in this go around is the increase in the budget for ICE. So when I'm telling you, and I should have said that up front, when I'm telling you what ICE is about, what the civil fines are about, I-9 compliance, those are long-standing laws on the books. So this is not something where anybody politically can start jumping on this going, oh my gosh, look at how terrible they're being to immigrants. This is literally what the law has been. You all have to comply with the law. You've had to do it since, if I go back, 1986 is, oh, I think I deleted that. Yeah. I think it was 1986 that everybody since 1986 has been required to have an I-9 for every employee you've ever hired. If you don't have one, you've already been violating, so you need to get up to speed, get those documented. Additional potential consequences for violation of ICE of the federal laws: forfeiture of assets and profits, loss of government contracts, business disruptions. They literally can shut you down. I've seen tremendous, like Tyson, media attention. And then you have employees, and I've heard about this quite a bit, especially in the horse industry, the tobacco industry, the farms around here. Decreased morale. People are worried about, well, what if I get raided? What happens? I will say this, this again, staying out of any debate. If you are stressed about your employees being subject to a raid, I mean this in the most loving way possible. That means you know you're employing undocumented. If you've texted anybody, gee, I know that we've got so and so working for us, and I know that they're undocumented. What do we do if we get raided? If that's not your attorney you're communicating with, you just texted somebody a knowing hiring undocumented workers violation. And if you don't think the federal government can subpoena your texts and obtain those and prove that you knew you had undocumented workers, they can do that really simply and prove that you have undocumented workers working there and you knew it, and now you're up to the $5,724 level. All right. Whoops. I don't know why that's on there. Went the wrong way on it. Sorry. So what should you do immediately? Immediately establish your I-9 compliance. Oh, this is a slide it was on. I knew I had it on there somewhere. 1986, you have to complete and properly fill out all I-9. You have to have them on file. You have to make them available. You have to allow the government to come in and inspect those. And that's down at the bottom of this screen. They can do this with a notice of inspection. You have up to 3 days to produce these to them. But I will just say this. I didn't list how long you have to keep these. You have to have them for 3 years. So former employees, if you have a W-2 for Lyle Hanna, but you don't have an I-9 and Lyle Hanna got fired last year, you're going to be hit with violations. And the chances of going to Lyle Hanna and tracking him down in a 3-day period to say, hey, listen, so I know I fired you last year for no reason. But I want you to fill out an I-9 because I'm being audited by the government and I need you to fill this out and I need to have it back. Chances are Lyle Hanna's not going to really go, oh, wow, sure, let me fill that out and get it back to you because you fired him last year. So the problem is if you think you can do it after the fact, you have very little time to get this done. So it's going to be critical that you immediately start. And if you're a larger employee and you've had lax rules, let's just not look that way. Let's say that you thought the last administration wasn't going to raid you, so who cares? Let's just get them in here and work. If you're paying people under the table, if you're doing things that just aren't necessarily up to snuff, you need to get them fixed. You need to build out a policy and procedure and have it in line, and you need to have the I-9s on file, properly filled out. I have a horror story from an employer that I was their GC, retained general. Um, they had acquired someone else, and the acquisition, the prior entity had a policy of, and I'm not kidding about this, there were some Walt Disney World passports and Walt Disney World IDs. And I don't mean employee IDs. I mean like where they used to have cute little things that said Mickey Mouse and you could have your picture on it and it said the date that Mickey Mouse was born and had a cute little fake social security number, for lack of a better word. Literally, we had certain employees that were being employed under the names of Daisy Duck, Daffy Duck, Mickey Mouse, Goofy. I use those as sarcastic, but it really wasn't because I actually had to deal with what do we do because they were using E-Verify, but the organization that they acquired was not. And that is a if the federal government finds out that Mickey Mouse is working at your facility, at your factory, chances are that might be a knowing violation, and that might actually be one of the 25,000 repeat offender, or they'll try to prove because it's pretty clear when the document that was attached to the I-9 was a Walt Disney World identification that that employee didn't meet the different things that the federal government accepts. I use that because even though it may sound silly, you all need to understand there are people out there doing that. If you're one of those, um, there's a new sheriff in town, literally, and they will raid if they find out that people are doing that kind of situation. You're going to get raided. You're going to get penalized, and the people who are knowingly doing that are subject to that up to 250,000 or yeah, the 250,000 10 year in jail. You've got to be careful. Clean that up. You need to, if you're running it correctly, you need to start doing regular I-9 audits. I'm not talking to mom and pop. I'm not talking to people that have 5 employees. You know those employees, you know whether you have them. I'm talking your large functions, the distilleries, the farms. You need to start doing an audit, especially if you're in the potentially targeted areas. The word from the federal government is they're not targeting unless they have a need to, but if they capture other people, they're going to take them in too. Take the marijuana farm out west. They had several people who were on the absolute worst of the worst. There was one on there that was a child rape, child abduction, gang related, and that's one of the ones that they caught. And they're going to take everybody in if they're in violation at the same time. So everybody's going to be guilty by association. They're not targeting employers. They are targeting, though, the individuals. If they can find out they're working there, they're going to shut you down. So be careful on that. The other thing is, I've heard word from the president in some of the comments that they're working on exceptions where they're not going to be raiding farms, they're not going to be raiding the temporary seasonal, they're not going to be raiding certain types. But again, if they can find somebody that is in the MS-13 gang, that is a murderer, and other people happen to be in the same place as them, they're not going to just release the people that are in the same place. So if you hire somebody who is in that situation, be prepared for the consequences. That's the issue. Also, the president can say something, and this goes both lines. So this is not political, and I don't want to see comments. The president can say something, but until there's an executive order exempting certain facets from a certain law, um, it's the law. The other thing I'll say, and this goes back to the last administration and the current, I don't care whether the government says or the executive branch says we're not going to enforce something. It is still the law. Take, for example, marijuana. It is a federally controlled substance. It is still illegal under federal law, even though the states are doing their own thing. And we had a whole seminar on that. We also had a seminar on seasonal employees. We had a seminar on how to handle all of those. We didn't get into a tremendous amount of immigration, but you could search back through, see the seminar we did on how to handle seasonal, temporary, farm worker, all the different things. The only difference now is make sure you have the proper documentation. I would highly consider using E-Verify. The employees or employers I've had that use E-Verify, it is a tremendous asset because it kind of does the work for you. If it's not proper, it'll kick it out. It also can be used as a shield somewhat. I'm not saying they'll protect you, but if you're using it and you have a problem there, they're not going to punish you as strongly because you're showing due diligence and following federal law by trying to use E-Verify. So keep that in mind. Train your employees. Managers and HR need to be properly trained on completely and properly filling out I-9s. Again, back to don't accept Mickey Mouse. That's not going to work. Documentation issues, make sure you have a proper document, how you handle them, and how you handle undocumented workers. You need to start doing that now because doing it after they knock on the door is way too late. You're going to have an issue. You also need to establish a response strategy. You need to identify an ICE team to handle all ICE activities. This is where I was talking about, again, having your attorney on speed dial, have their cell phone number, have an email, make sure they answer their phones. If they're not really good at answering your phone or an email, text message, you need to find somebody who is. Um, I literally handled all the way back to COVID. The first time I ever met any of you, I handled a COVID emergency, being the very first COVID case in the state of Georgia for a major, major, major manufacturer. It was my decision to shut down the business or to keep it open. Speed dial Friday night at 9 o'clock, third shift getting ready to start. What do we do with the COVID person on that shift? And how do we handle this? And how do we handle all the media? Dropped everything, handled it. Um, Huge issue. You need to have somebody who's on speed dial. General counsel better be ready to answer the phone all hours of the day, or retained counsel needs to do that. You need to have a manager on each shift that can handle every single inquiry because this can happen on first shift, second shift, third shift. And I'll just say, whether it's the last administration with EEOC compliance, this administration with ICE, or all the way back to Obama. I don't know whether I saw as much under Bush second. Um, but the raids don't normally happen when general counsel's on site before 5 o'clock. They don't normally happen with your elite C-suite people sitting in their offices. They usually happen with factories and lower level on second or third shift when they're hoping that somebody will say or do something that may not be properly trained. So have people on every shift that know who to call and have the person on the phone answer the questions from ICE, not necessarily your third tier people that don't understand how to handle somebody knocking on the door. You have to make sure this is done in the right way. ICE audits, not talking raid, ICE audits typically start with a notice of inspection that allows them to inspect all I-9 forms within 3 days. And if it's not there, then that's when you start getting potential sanctions and penalties and everything else under the law. So you have to be very careful. It looks like accidentally my tax thing, I had one page on taxes and it looks like it got deleted by me, nobody else, not their fault, but it is mine. I'm going to see if I can find where I had it. So hold on just a second. I'm going to stop sharing for a second while I pull this up and see if I can find it. Those slides are available. What I'm going to do is update the slide with the information because I'd like to put the tax stuff on here. Basically, what I'll tell you from memory is that the tax for the small business has a permanent thing that has happened with the taxes where I'm trying to find it. Okay. So small business had a temporary tax rate that was a lot lower, and that was in the Tax Cuts and Jobs Act of 2017. That was going to expire at the end of this year. And so now what's happened is for your flow throughs, which are your S corps, your C corps that are being taxed on money left over. A lot of the time in the past, I think it was, and please don't quote me on this, I don't do taxes. I think it was 38% is what it used to be, which was higher, or 50%. It was higher than the individual tax rate. So what happened was most businesses for profit would flow through to their shareholders and have shareholder dividends so that they were paying taxes at whatever their rate was, because the business rate was so high that there was no need to have money in the business. Now, what's happened is they've made it permanent as it can be. So that's going to now be down at the same rate as individuals. So it ends up being that you can now carry forward debt for the business and carry forward assets from the business to pay off debt and start paying taxes as a corporate entity, reducing your debt load instead of just carrying it forward. If you're anything like businesses that I've run and businesses I've represented, for years, I'd say for decades, we had basically a carry forward of losses, and the business never made money. Why? Because if we made money, we paid taxes, and the tax rate was so high. That went down in 2017, so a lot of us took advantage of that to have that move forward, um, and start reducing our debt load. You can continue to do that because you're going to be taxed at the same rate. Instead of being 35%, 38%, it's now permanent at 21%. That's going to be a big impact for businesses. It will allow you to invest more in assets and so on. There's also a permanent 100% bonus depreciation. This is for businesses that want to do capital improvements, capital investments. If you want to capture all of that in one year instead of having it over multiple years, you now have the ability for certain machinery, equipment, and short-lived assets to place those in service after January of 2025, and you can have that immediately deducted in a full year, first year, instead of depreciating that over time. If that's valuable to your business, if you want to offset profits, um, that's going to be a good thing for you. The only other thing is that there's a permanent modification to the business interest deduction. So you have the ability now to make that permanent instead of temporary. It also changed the EBITDA. For those who are familiar with this, I'm not going to spend a lot of time. I do a lot of this with mergers, acquisitions, where we're looking at EBITDA, which is earnings before interest, tax, deduction, and amortization. During prior administrations, that was only a bit. It didn't include depreciation and amortization. Now you're allowed to add back in depreciation and amortization in determining your adjusted taxable income. It's going to be good for any of the owners that are on here. Again, my caveat to this also for those that are in oil and gas, because we do have that in Eastern Kentucky, there is a different alternative minimum oil and gas taxation that they're allowing for how do you determine basically your capital gains and so on. Oh, there's a big one for the distilleries. I don't want to skip first. Let me just say with the adjusted financial statement income, um, if you need that, contact your CPA, contact me. I work with CPAs on those, and we can walk you through that to make sure it's worded and done correctly. The big thing for distilleries, the big thing for anybody in the wine industry and anybody working with research, uh, your research, if you're doing research in the United States, there is a capitalization and amortization for domestic R&E that has a benefit for you doing it here. So I know we have a lot of research-oriented businesses in the distilleries, the wineries, even tobacco still. So if you're into that, you need to look into this because basically this was designed to bring business back to the United States, and Kentucky has a tremendous amount of business in the United States. So if those are things that are created or important to you, there's a lot of clawback here, meaning they want business here. A lot of the business here was already here. We weren't shipping things out. So if your business is already here, you can benefit from that with a lot of tax write-offs. So be on the phone with your CPA or your CPA, your CFO, your independent accountant. Find out what your benefits are, and if they don't know, they need to dust this off, take a look at it, and try to get up to speed because there's a lot of tax benefit you may be able to have. And I think we have a tremendous number of small, mid-sized businesses that are on these calls. These things can help you a lot. So look into it. I apologize for the deletion of that. I don't know what happened, Lyle. I had a slide on it, but mistakes happen. So I'll go back through, see if I can find it, and we'll make sure to update that for everybody.
No
And
worries,
that's
Jim.
it.
I'm going to
Two
jump
minutes
in real
over.
quick because we have a couple people that are hopping off, and I want to share a few housekeeping things.
Sure.
One, the slides and a recording of the webinar will be available on our website within a few days. So if you'll sit tight, we'll send out an email once it's up there, but both a recording of the webinar and you can download all of the slides. Those will be available on Hannah Resource Group's website. And then credit for the webinar today is still pending. If we're able to get that credit, we also will send out an email as soon as we receive that, so that you have both SHRM and HRCI credits. So didn't mean to cut you off, Jim. I know we were
No,
going to
that's
end at
it.
11. You're going to stick around and answer a few questions for us, right?
Yes, and I
11 minutes.
apologize for going 2 minutes over, but I was trying to get through the tax and I had to find it. So
You're good. Um, Here, and I'll throw our website in the chat. In terms, a couple people have talked about when things are actually going to become available. I tried to do a little bit of research while we were on here just to provide, but it seems like the taxation on the tips and the overtime is actually going to be retro as of the beginning of the year. So
that's
when,
correct.
okay,
Yeah, and I think I'd said that I thought I saw that question come up and I said this is one that's retroactive to January 1st. There are certain things they could change tax basis that's the entire year, and there are other things they couldn't do, which was the healthcare plans.
got it. All right. Any other? Let me go through.
Great input, Jim. That's a lot of stuff to cover in a short period of time.
It was a lot. So yeah, is there anybody who has anything? I'm going to hang on here until we're done with questions or another half an hour or so. Um, and I did try to cover this as broad-based as I could. There's so much information. It took a while. Wow, we did. I answered it. Answered a lot of them on the fly. So
Love it.
I want to tell everybody. Just I'm gonna put a plug in for Hannah Resource Group. Um, the willingness to put this on for free to find the and I'm not talking about myself, I'm talking in general because they do this all the time, but putting on quality people to try to put together webinars for you all on key issues like this is an amazing issue to have. And the time they take to put this together is fabulous. So it should show you the dedication they have to trying to help you all with your business needs. So there you go. There's the
Thanks,
free
Jim.
plug.
Appreciate it. You've been a great
Nobody
partner to us
nobody
too.
asked me to
So.
do that.
Jim's the guy when I'm in National Sherman, call him up from San Diego and say, "Hey, I think this is going to pass. You get to present on this." And he said, "Yeah, I think it's going to go through in the next 24 to 48 hours." And it was 36 hours and it was passed and he was ready to roll. So thank you.
Yeah, everybody's like, "Oh, there's
Um,
no way it's going to get done before July 4th." I was like, "No, yeah, it will." Because she said, "Really, you think it'll be done?" And I wrote her back and I said, "Yes, it will be done. It'll be done tomorrow." Because I do have people on the Hill that I'm regularly in contact with, and because this impacts a lot of my clients. So we try to stay on top of things. I do a lot of legislation and lobbying work for people, so it's my job to be aware. So yeah, I knew this was, unless something fell apart last second, this was planned to be adopted on the 3rd um, all along, which I was shocked at when I first heard, but then I was like, yep, it's going to be there. And Kendra was like, really? That's soon? And I said, yeah, they want it for 4th of July.
Yeah, we weren't
So,
ready. I've got a couple questions that have come through. Can you provide an
okay.
overview of how overtime will be taxed in 2025 and then going forward? How will
Yeah.
the no tax benefit be provided?
Okay, so we did cover this, but I'm glad I'll go ahead and recover it. It is in the slide. So the way this works is you are taxed on your regular wage for all overtime. Anything premium, if you pay like holiday pay 2 times or overtime, and I'm not sure about holiday because I don't know that it was actually referenced, but overtime, anything over 40 hours you will be taxed on your regular wages, but you will not be taxed on the premium, the overtime that you pay, the time and a half. So if you're paid $15 an hour, the $7.50 will be free of taxes. The $15 will not. Also, this does not impact the state. So the state can continue to tax. Kentucky has been working on toward a no taxes on income, and that's so. But right now, there's tax on income, so you'll still be hit with state taxes on your overtime
Hmm.
until that's changed.
Yeah. From an HR perspective, what I think this also means for us is from a payroll system, we need to make sure that we're using the correct codes in the system and we're not lumping everything together. So Jim mentioned holiday. If you're putting holiday and overtime and several other things in the same bucket, the system won't be able to tell. So you really need to just go back and look at your pay codes and how you're running payroll.
And that's something you mentioned last week, Kendra, that I wanted to say I forgot to put into the slide was the need to make software changes to your automatic payroll because the overtime is taxed differently than other types, and you have to make sure you're now differentiating that.
What about suggestions on training for conducting in-house I-9 audits? Got an
So,
idea, but what do you recommend?
yeah, so I think you need to find again, either an attorney or a specialized group or individual that understands the fine nuances and knows how to teach it. Because, like, I've done a lot of these where I've done everything from NLRB training. I worked with managers to make sure we weren't violating federal union anti-union laws or federal anti-union interference laws. I'm sorry. Um, I worked with that type of training, and I was amazed at the level of understanding of what the law was by senior management, but not understanding what you can and can't do under the applicable law or how to implement it. So it's not just as an HR professional, and you all know this, it's not just you pulling up the law and going, oh, there's the law. You have to know how to train and what to say and how the law is enforced, and things change daily. An executive order can change how an I-9 has to be done. So it's critical to get someone, and that's what a general counsel does. That's what we do in terms of trying to make sure that we keep all of our employer clients in line with federal state law, but get somebody who actually has the proper training. I think I saw something dumped in from SHRM. SHRM has a lot of great information on their website about proper training, proper details, but keep yourself up to speed on current trends because it can change and you have to be ready to train your people on what's going on now, not 3 years ago. Anything you saw that's 2 years ago is ancient. Don't read it. Don't rely on it. Make sure you update it. And I would suggest even on SHRM, if you get something off of SHRM, have it reviewed to make sure that it's current. Have it reviewed to make sure it applies in Kentucky and have it reviewed to make sure, or whatever state you're in, have it reviewed to make sure that there's not any additional state laws that have to be complied with.
Thanks, Jim. I agree. I-9s seem simple when you look at them, but just the number of errors that come through for the most minute little details, it can be challenging. All right, clarification, overtime exemption applies only to federal income and not FICA. We already answered that one. Thanks, Randy, for that question. Um,
Yeah, FICA is that safety net, so it's going to apply to total income, no matter what, up to the point that you've contributed. I think it's $7,500 of your income toward FICA. That applies to every dollar you receive. There's a percentage paid, so that you can't exempt, just like you can't exempt FUTA, SUTA taxation. You literally have to continue paying those, but the employee can't be taxed on the employee portion of overtime. Thanks for
Yeah.
clarification.
And Jackie's question is, when the overtime rule is effective back to 1/1, taxes have already been paid on that overtime. My understanding is when the employee goes to file at the end of the year, they'll receive a refund up to 12/5. Is that right?
That's I don't believe they're breaking this down by month, so I don't think it's going to be up to
Oh,
12,500.
12,500.
Right, I'm saying I
Oh,
don't believe it's going to just be 12,500 because they get to deduct up to 25,000. Um,
okay.
but I don't think it's prorated by month. But
Okay.
what they will get is a refund of their wages that they were taxed on at overtime. And I may be mixing the two because the 25,000 may have only been on tips. And so don't quote me on that, but they will receive a refund on the overtime because they've already been taxed. So most people get a tax refund at the end of the year anyway, because what you're taxed on throughout the year is an estimate of how much your taxes are going to be. And so you get a refund at the end of the year. It won't be dollar for dollar because if you underpaid for the second half, you'll be taxed on that. A lot of employees, and I'm not giving tax advice, but keep this in mind. If you've been taxed now for 6 straight months on your overtime, and you know you get a lot of overtime, you can ask your employer to adjust your deductions so you're not having as much withheld. And that way you can actually get paid more for the second half. Again, that can be risky because you might owe taxes at the end of the year. But if you kind of know what your overtime is and you think you've already paid in a whole lot because of the time and a half, you can adjust that. Just be careful so that you don't, or your employees can adjust that. Be careful so you don't get hit at the end of the year with owing a lot of taxes.
Yeah. Which I think we're going to have a lot of questions come April 14th. It's
It'll be
uh,
too late.
Yeah, Beth has asked about, does your payroll provider calculate? I can't answer for every payroll provider, Beth, but the major ones, the ones that we're working with are. And Melinda, good to see you. Question in here was, are employers required to report overtime in a separate box? You already report overtime separately, but yeah, I do think there's going to be a separate box for overtime. Is that right, Jim?
I think so. And there's also mixing another thing in there. I think there's going to be a separate box for a number of hours worked, just in case somebody might be on Medicaid. And I think it's probably going to end up needing to be a standardized box of number of hours so that HR, and you'll need to talk to your payroll providers to see if they're going to put that in there, because otherwise you're going to have all kinds of forms to fill out. If they can do it automatically and add up to 80 hours in a month for part-time workers, that's something to be talking to your payroll providers about as well.
Always fun.
Some of these questions are going to be answered by some of the regulations. Remember, this is the bill. This is what I like to call the skeleton. And then all the regulations that underpin these will be built and attached to the skeleton to make the body of law. So stay tuned, because each of these bodies, whether it's the IRS, whether it's the Treasury Department, like with the list of tipped employees, you're going to see all kinds of regulations from the different agencies that have to enforce all of these things. ICE, you're going to see tremendous amount of regulations to say this is how this law will be interpreted. So we're at the beginning where we have a skeleton, but we have no body around the skeleton. So I'm trying to interpret only the law, and at some point the regulations may twist that a different direction.
Welcome
So
to the teaser for our next webinar with Jim.
that's right.
Details to come.
Yeah.
All right.
Excellent.
I don't see any other questions in the chat. Thank you, Jim, again for hopping on, especially with a moment's notice to read your 1,700 pages. So appreciate you as always.
Well, thanks everybody for listening. I appreciate being a part of it.
Everybody have a great week. What an exciting way to kick it off.
Yeah. Thanks, everybody.